I mean, I have utmost respect for Target. My wife and daughters are passionate Target shoppers when we go to the U.S. And I like their stores as well. I think to some degree, at the same time, they remind me a little bit of the dog that was chasing the car. Now that they've caught it, they're trying to figure out what to do. And we've converted a number of Zeller stores to Canadian Tire, a number of Walmarts to Canadian Tire, and I think you had a note in there. Cost, it's going to cost them something like $10 million a store. They're going to be making a huge investment to make this work, for it to be the Target experience in Canada. As I said, we are preparing for them. We set our own strategies and figure out how to exploit the market, but we're obviously mindful of competitors. What I think will be particularly interesting is what's going to happen in the apparel sector, because this whole value, like the apparel sector has gone through a huge change in the last 5-10 years. Fast fashion, much cheaper, disposable fashion. There are new players in that area in Canada. Walmart's in there, the H&Ms and whatnot, Loblaws, Winners, now Marshalls. They're all going after the same segment, and it'll be interesting. And that's really what Target is particularly well known for, in addition to home design.
Jim, agree with everything you said, Ken. I think the challenge then is for the others to keep up, and I alluded to this. And again, with apologies, visit a Sears. And I guess I say this with a little bit more pain as a second-generation Eaton's employee to walk through the Eaton Center store and see something that was, when it was built, the grandest department store, even better than Macy's in New York City, and has fallen so low from neglect. We realize you must invest in these stores. The Bay is facing the same challenge, and as many of you know, they tried to raise about $500 million, which is less than $10 million per store, to go out and just become current with the 91 stores they already have. They tried to go to the public markets with that this fall. They have pulled that off because at this stage, at least, the public markets didn't show enough interest for them to get $500 million for 20% of their company, and all of the exposure and headaches that becoming public again would require, and potential distractions that would get. But they still, the clock is still ticking, and they will be directly compared if their stores are run down. And the stores in the B and C centers in this country have not been fixed, and the Sears stores have not been fixed. And the cost of flooring and lighting is no less for Target than it is for them, and they will have to become